What's up guys, FX Keys here, and in this video we're going to break down CAD, CHF, this trade that you see right in front of me. So if you watched my last video, the trade was like very simple and obvious, whereas this trade has a lot more complexities to it, which isn't really common in my strategy, but like, I just had a lot more confluences and things like that I can add on to, which improves the win rate of my trading. So first of all, I did spot this trade on the 1 hour, but it was refined on lower time frames. So I trade the 1 hour and the 4 hour. Where I spot my setups is the 1 hour and the 4 hour. So I spotted this setup on the 1 hour. As we can see, we had a little pullback with an impulsive move up, whilst we are on an amazing uptrend. Meaning, okay, we have a setup. Even if the setup ain't valid on the 1 hour, it can be valid on lower time frames. So this trend clearly isn't really a 1 hour trend. The pullbacks ain't significant on the 1 hour or anything like that. So if we went down to a lower time frame like the 15 minute, okay, now the trend looks better. These are more significant pullbacks. So this is more like a 15-minute trend. But like I said, I trade the 1 hour and the 4 hour. So my setup was spotted on the 1 hour. What I do is I confirm that the trend is the same on the time frame that I spot the setup and the time frame above. So currently, like I said, the setup is a 15-minute trend. So the 15-minute is an uptrend, the 30-minute is on an uptrend, the 1 hour is on an uptrend. We just want to double check as well, the 4 hours on an uptrend. 4 hour is on an uptrend. And whilst I spot that the 4 hours on an uptrend, what I can see is that to the left, we have a possible target zone, or even a rejection zone, you could say. So right here, we had an impulsive move down. At the time, I guess you could say we was on like a short-term downtrend. So this is like a sell order block. It may not hold because I don't even think it will hold, but it's possible. Actually, you know what? It could hold. It's possible that this is an area that price will reject, and it's a good target zone. This is like a double confirmation because the take profit is below the area that I expect price to go to. I expect price to at least go to here, and the take profit is below it. So if price the trade triggers, it has a good chance of going up to take profit because we have a 15-minute uptrend, a 30-minute uptrend, a 1 hour uptrend, a 4 hour uptrend. All the time frames are in the same direction. We have a good target zone above the take profit. What else do we see? We see imbalance right here. Now, most of this imbalance was filled, as we can see from this move here, but we still have a little bit of imbalance left above the take profit before the target zone. So we have like a confirmation of an area that price will probably go to. We have imbalance, we have trends on multiple time frames. So we have a good amount of confirmations for this trade. So let's go back to the 1 hour. What else do I possibly see? I see a lot of liquidity without any of it being taken. So what I mean by that is right here, it's just pullback, push up, pullback, push up. We never see any of these lows really being taken. I don't even know if it ever once was. That wouldn't even be considered a low. This would be the current low. So no, like everything is just a great trend. So there's lots of liquidity being left behind here. So in my opinion, what we're going to see is a very impulsive move that takes it all, a quick move that takes all this liquidity. I'm not saying that's going to happen, but I just see that happening based off of like chart experience. And we have the order block here. So it's possible that we see a rejection of this order block that impulsively takes all these lows, and maybe the trend will go down. Let's see the daily. Daily is on a downtrend. So yeah, that could be a very possible setup right there. And again, I'm not going to trade this. This isn't something I will trade, but I just like to know where the market is moving. So if I go back to let's just delete this. So yeah, we have a lot of confirmations for price to go to this take profit right now. And like I said, we are on an amazing trend. These are the only times I take trades. I'm only looking for amazing trends. I know I have so many pairs here, but I'm not trading all of these. I'm only trading these when we're on great trends. I know this isn't a great 1 hour trend, but like this is a great 15-minute trend. There will be a lot of winners here if you took 15-minute trades. For example, right here, this one I never actually triggered, but there's probably a lot of winners. either way, we're on a great trend, and these are the only time that I really take trades. So we're looking for situations like this. So now let's go to the setup. Like I said, I spotted it on the 1 hour. We have the pullback, the impulsive move that broke the high. Now we have a setup. We're looking for the order block. I'm going to delete this. Now on the 1 hour, the order block in this situation is the last sell before the buy. So if I turn the magnet tool on, this is the 1 hour order block. For me though, this is not a valid setup. Let me explain why. My order block has to have imbalance within the order block. So the order block again is, let me actually just, I'll draw it out again. The order block is here. We need imbalance actually in this order block. So right here, this wick would need to be below the top of the order block. If the wick was down here, we would have imbalance from here to here. But currently, the imbalance we have is from here to here. So this 1 hour order block would not be valid. I would need to refine it down to a lower time frame. And why do we want imbalance? What imbalance means is pure buying. So again, in this candle, we have pure buying, and we need the price to be balanced out. That's how trading is. And when there's buyers, there needs to be sells. So if we have pure buying here, I expect price to be sold and price to come down and fill this imbalance. So for example, if this was our whole order block, this candle, I know it isn't, but let's just say it was. We have pure buying here. So what I'm expecting is price to come down and fill this imbalance. And when it fills the imbalance, it also triggers us in. And as we are on a great uptrend, the whole goal is impulsive move, leaving imbalance on the pullback, price comes back, fills that imbalance, taps us in, and then continues on with the trend and triggers us in, hits our take profit. So if this was our order block, we'd have the imbalance, price comes down, fills the imbalance, taps us in, and then continues on this way and hits take profit. Like for example, in this situation, like in this fake situation right here, price came in, filled this imbalance, and then went up to take profit, which the range high will be here, so right here. I can even do a little drawing if you want. That is my entire concept behind this strategy. We have a nice trend, we have a pullback, we have a really impulsive move. Let me turn this magnet tool. We have a really impulsive move. We have order block here, and we have pure buying, direct imbalance at the order block. We have imbalance from here to here. So I expect price to come down, fill this imbalance. It comes down, fills the imbalance. The entry is at the extreme. It fills the imbalance, and now it should continue trend. The high is here, so I take profits here. Continues trend, hits take profit, and the traders hit take profit. That's the whole goal behind the strategy. So we go down to the 30 minute. Is there a better refinement? Oh, sorry. Let me just put it back on there. It's the 1 hour order block. We need to see, is there a refinement within this order block? Okay, there's not, but we see that the imbalance starts from here to here. So if you want to take a trade from here, it would make sense, but we can just continue to refine even more. 15 minute, is there anything? No, there's not. The last sell before the buy is here, but again, no imbalance. Let's go down to the 5 minute. Okay, now we can see an order block. The last sell before the impulsive move. Here is the most extreme setup. It has imbalance. You can see direct imbalance. So from the sell, we have straight imbalance. Price, we need to come back down, fill this imbalance, tap us in, and hopefully continue trend. But we can continue to go down time frames. We try the 3 minute, try the 2 minute, try the 1 minute. Is there a better refinement on the 3 minute? Yes, there is. It's only a little bit better, but it is better. Now, my setup was actually not even on the minute. It was on the second. Again, like, remember this, I'm not taking a trade. I'm just basing my most extreme entry point off of the second. So if you go into the 1 minute, what we can do is see right within this 3 minute order block, we have this big wick. Now, I was taught this when I was learning a lot of trading concepts, something called the wick trick. So essentially, the candle started here, the body started here, this is where the candle opened, and the candle closed up here. Meaning, within a lower time frame, so we're on the 1 minute now, but within the seconds, maybe the 1 second, the 5 second, whatever you want to look at, you could go down to the 30 second, what we'd see is an impulsive move down, followed by an impulsive move up, because we can see this big wick, it started here, closed here, so we know it pushed down and pushed back up. So there should be imbalance on the second time frame within this zone. Now refining it from here to here would literally be, let's see, it would be a 0.5 pip difference. So if you want to take the risk of there possibly not actually being imbalance within this zone, you can, or you can go on the seconds to check it, but then you have to pay for the trading view premium. But you can just put your pending order here, or you can just take the safe option and stick with the 3 minute. I took it off the seconds. But in this situation, I'm going to base it off the 3 minute for you guys. So pending order would be here. Setup was based off of the hourly, first of all. So this is my entry point. My entry point is at the top of the order block. Entry will be here. Now, the way I use range highs, we have the pullback. Here was the current high before the setup was created. It pulled back, impulsively broke, the body closed above the high. We have a new range high here. A new range low down here. If I saw the setup, take profit would be put here first of all. Again, maximum 1 to 1.75, minimum a 1 to 1. 1 to 1 could be here. But once this range high has been broken, the setup has been deleted. And you might ask me, wait a minute, the trade didn't even trigger. So how is this a winner? Because you can see the wicks broke above it. I do not consider wick breaks to be a break of the range high. The only time I consider the range high to be actually broken is when one of the candle bodies close above the range high. So, for example, if this green candle, the body, closed up here, the setup would just be straight up deleted. But until that happens, what continuously happens is I increase the take profit until this stays the range high, but I know the take profit keeps going up higher, but once a body closes above it, it's deleted. Not the actual take profit, but above the range high. Range high will always stay here. The first time it was deleted was right here. This is when the range high was broken, when the body closed above it. But yeah, take profit continues to go up until the range high has been broken. And the reason behind not deleting the pending order when the wicks break above the high is because it doesn't actually mean that the buyers have won. Essentially, we're having buyers fighting against sellers right now. The buyers are trying to push price up, but the sellers are winning. They're pushing price back down. So, for example, buyers being placed, sellers are being placed. The sellers keep price from closing above that high. And until the candles do close above that high, we're hoping that the sellers win and push price down to trigger us in. And in this situation, the buyers never got price to close above the range high. The sellers pushed price down and they kept the body closing below the range high. So they pushed price down, triggered us in, and price came up and even gave us a better take profit. So yeah, we're never deleting the pending order until a body closes above the high or below the low, depending on the direction of trend. And as the take profit goes up, the stop loss can also go down. So like we saw before, I was on a 1-to-1, now I'm on a 1 to 1.3. If you want to go for the most extreme, I should say, or the least conservative, I would be looking for a 1 to 1.75. That's my least conservative. My most conservative is a 1 to 1. That's my range. But if you don't care, if you want to be even more, you could just stick it at the range low. I would stick it below the range low because price can always come down, liquidity, grab that range low and then continue its way up, and you could just got tapped out. So if you put it below it, it's always a little bit better. But the way I trade, I like to take winners. I don't like to take losers. Win rate over R2R with me. So I went for a 1 to 1. This was my trade. Again, my stop loss is based off of where I expect price to go versus where I expect price not to go. So I'm much more expect price. I expect price to go to take profit much more than I expect it to go to stop loss, and it's a 1 to 1. So I'm happy to take this trade. If it was a bit tight, I would be less happy with the trade. So I wanted to feel as comfortable as possible. So 1 to 1, price has a lot of confluences, a lot of reasons to go up here, which it did. We saw it went up to take profit. So range high stayed here, range low stayed here. Take profits moved up whilst the wicks went up, and then price came down, triggered us in at 9 p.m, triggered in right here, and I think the following day at like 1 p.m, yeah, 1 p.m, is that 1 p.m? Yep, 1 p.m, it hit take profit the following day. So this was the trade. I know I probably said a lot and it may be hard to even like understand it because it's a lot behind it, but I went in depth on this video. I know it might be hard to understand, but if you kind of think about what I'm saying, it should all make sense. And you don't even need to take a sell like this. Like, this is a technical one, whereas my other one the other day that I posted, NZJPY, go check it out if you haven't watched it. Like, that thing was so simple. I don't even know if I have it marked out. This is a different one. This wasn't even... I think this was the one right here, actually. Yeah, I'm pretty sure this was it. This thing here was... Oh yeah, range high here. Impulsive move. Clear order block left behind. Target the high. It didn't wick above the high again or anything like that. Trigger us in. Hit take profit. So much more simple. So yeah, hopefully you guys enjoyed this video. If you have any questions, feel free to ask. I'll always answer the questions in the description. Follow my Instagram, join my Telegram, and yeah,